construction industry relies heavily on the insurance sector to safeguard its key assets, projects, equipment, and personnel. Currently, it is seeing robust demand. This is largely fueled by fiscal policies enacted during the pandemic era and initiatives like CHIPS Act, which have boosted both residential and commercial infrastructure projects. Consequently, construction costs have soared steeply. On top of this, the increase in natural calamities has impacted both the frequency and magnitude of insurance claims. And adding to these challenges are the emergence of new risks. While the industry traditionally faced losses primarily from events like floods, windstorms, and theft, it now confronts novel exposures such as those related to renewable energy, hailstorms, and other catastrophic events. These factors have created a challenging market for construction project insurance. While many of these challenges are beyond the control of insurance companies, staying competitive demands that they innovate their processes by leveraging technology and reducing costs. There are specific strategies we recommend to reduce overall costs relating to managing insurance products and programs. We are seeing an increase in the prominence of MGAs in the builder's risk space, where they can use their market expertise and favorable cost structures for better risk assessment and pricing. Let me cite an example here. A US-based mutual carrier approached us with a request to set up an AIS-based builder's risk program for 3 distinct MGAs, each targeting different customer segments. The conventional approach could have been costly and resource-intensive, considering the capital commitments required to launch 3 separate programs for 3 different entities. We recommended a streamlined approach where programs such as AIS Builder's Risk Standard serve as the foundation without necessitating individual implementations for each MGA. Instead, we tailored each MGA's view of the underlying AIS Builders Risk program to align with their program-specific requirements. Also, in this model, we used a single deployment of the base AIS program with multiple tenancies, each one representing one distinct MGA. And this model significantly reduced the costs associated with establishing the programs, as the deployment cost was shared across multiple MGAs. It also helped them reduce the time to customize each of these programs to their specifications as well. Consequently, we successfully launched all 3 programs within a span of 2 weeks. And interestingly, the customer just onboarded a new MGA while expanding their coverage lines to include various additional AIS lines such as COP, Scheduled Property Floater, electronic data processing, installation floater, and more. I can also give you another example. We've been able to help carriers to concentrate solely on processing price-qualified submissions for underwriting builder's risk. One of our clients wanted to offer their agents a better way to obtain indicative quotes for a specialized builder's risk program. We helped this carrier implement a straightforward 3-step process for quoting this line of business. And this in turn empowered their agents to capture customer interest promptly and provide price-qualified submissions to underwriters. Consequently, underwriters could dedicate their attention exclusively to deals with high probability of closure, significantly improving the hit ratio. So from a cost perspective, we are looking at thousands of dollars as compared to the traditional approach of hundreds of thousands of dollars. Additionally, by circumventing the traditional underwriting process, the carrier also gained visibility into strong and weaker classes of risks, providing valuable insights into opportunities for improvement. The client examples I gave for builder's risk, or for that matter, the marine programs, use a multi-tenant single deployment scenario. We have found that in the past, MGAs and carriers want to be sure that there is no compromise on their data. They need to keep their data secure and isolated from other insurers on the cloud. We prioritize safety and security of each insurers' data by implementing separate databases per insurer. This means that each insurer's information is stored in their own isolated repository, completely segregated from other insurance companies' data. That means that there is also no mixing of or overlap of data between insurers, thus maintaining confidentiality and integrity of each insurer's sensitive information. This helps insurers enhance their data security and stay compliant with regulatory requirements and industry standards. We recommend this approach for carriers and MGAs looking to benefit from the scale of cloud, speed, and security as well. This is a key item to look for when considering how to enhance construction lines of business like builders risk.